What's going on, guys? It's Henry, and in this video I want to teach you how to grow a small portfolio and how to trade options even if you're a complete beginner. We're going to be talking about the strategies that I use to grow my portfolios. So I have one portfolio right here with 1.97 million, and I have another portfolio right here with $855,000. Now, for the purposes of today's tutorial, we're going to be using Robinhood, which you can check out in the link in the description. They give you some free stocks, and also with my link you have other perks. Now, what I want to discuss is if you're starting off as an option trader or this is something that you want to get into, the most important thing that you want to focus on is consistency, because way too many people, they start off option trading, they're super hot at first, they have some losses, and they basically give up. But if you stick to this, you are going to do really well. By the way, before I jump into multiple strategies, I appreciate a like on this video for the free course. And if you want a book on option trading for beginners, the best one I wrote myself with my personal stories of becoming a millionaire and trader is the first link in the description. Let's start off with buying call options and the only way I would do it, which is with earnings. So when you're buying a call option, you are betting on a stock rising. A call option controls 100 share of stock. It's really important that you finish this video because with options, not only is it important that you pick the right direction, but your timing also has to be correct. As we'll see, options have expiration dates. So, for example, I'm going to show you how to buy call options before earnings and then profit off of those call options. Now, call options aren't free. On top of the strike that I'm going to show you, you do have to pay a premium. Let's go over a real example on Apple. Here is Apple options. I'm looking at the option chain, and specifically, I'm going to go through a few different strike prices and the benefits of buying call options. So first of all, the biggest mistake that investors make is buying call options that are way out of the money. So as I go higher, you will notice that the premiums get cheaper. So of course, options aren't free. Everyone wants to be compensated, but the cheaper the premium is, it looks more attractive for a beginner, but in fact, it's not a very smart move to buy out of the money call options. Show you why. So if I expand this option right here, you will see that the delta is 0.019. What that basically means, and the reason why I'm laughing, is because this is only going to happen about 1% of the time. Out of 100 times, you're going to lose 99 times on this option. That's why buying an out-of-the-money option is a really bad idea, despite the premium being low. In fact, the way you want to buy call options is going to be somewhere near the money. So, what do I mean by that? Currently, the stock's price is $145.61. Near the money would be right around here, either 145 or 150. So check this out. Whichever option that I buy, I'm going to actually control 100 shares. So it's actually not that big of a deal if I buy the 145 or the 150 strike price. Although there are some differences that I'm going to go over, it's only a few $100s. So if you were to buy 100 shares of the stock, it would actually cost you $14,561. Very expensive, right? That's why buying shares is not as attractive as buying call options. And that's what is the beauty of option trading, is that you get a lot of leverage. You can control 100 shares without having to fork up all that capital, which makes this a very beautiful small account strategy. If you have a small account, buying call options can make you very wealthy very quickly. It may not be the best strategy because it's not as consistent, but if you're looking for the largest raw returns, this is going to be the video for you because you can do that by buying call options. And specifically, I recommend that if you want the largest return in the quickest amount of time, that you will buy call options before earnings. So when I was at Goldman Sachs, I did some studies and I was looking at the research. If you buy call options right before a company reports earnings, in a specific way, which I'm going to show you some examples of, then you can actually have a double on your money very short term, and this is a very proven strategy. Now, going over this example right here on Apple, okay, if I expand this 145 call option, you can see that the delta is 0.54. So actually, your chances of success here are a little bit higher than 50%, which is much better than the 1% option when you buy out of the money, or even if it's a 10% option, that's not good. The most successful traders and the most successful experiences that I've had is going to be options that are in the money. Since they have a higher delta than 50%, your chances of ending in the money and actually making a profit is again going to be higher than 50%. Now, the expiration date that I'm going for is December 16. But if you're watching this video in the future, all you really have to know, if you're buying a call option, then it's better to do it at least 1 month out if it does not have earnings. And if it does have earnings, then as long as you capture earnings, you're going to be in good shape. So let's go over this example of Apple, and then I'm going to show you a few different examples of how I would look at earnings and figure out if that company is going to beat or not. So here's the mechanics. Say that I buy this $145 call option. Now, if I go ahead and buy it, the total cost is going to be $870 per contract. As you can see here, my maximum loss is $870. That means the stock has to move a lot for me to actually break even. The reason for that is, although the strike price is $145, since the premium is $8.70, my actual break even is going to be $145 plus $8.70, or roughly $153.70. This is why buying call options is a bullish strategy. You want to make sure that the stock is going up, because if it goes up, you're going to profit. However, if it stands still, you can lose 100% of the premium that you pay, or this $870. And if the stock goes down, of course, you can still lose the $870, but the good news is about a call option is you cannot lose more than what you pay for the call option. So one of the benefits is you have a limited risk profile of just $870, but you have an unlimited upside. So if Apple goes up to $200 per share, this option is going to be in the money by $55. If I take 200 minus 145, that's 55, and I'm only paying $870, so I'm turning $8 into $55. That's basically a 6x return in a couple of months, and if you do that year round, then you can have a 35x on your portfolio. That's the beauty of call options. You can 35 times your money. However, it is pretty risky. That's not going to happen on a consistent basis. Now, I know buying options is super attractive, but are you looking to make weekly or monthly income? In this video, I'm going to talk about doing covered calls on stocks to make weekly and monthly income. Throughout my experience, I think covered calls are literally the best strategy to use. So check it out, Kraft Heinz, I have an average price of $39.42, okay? So I ended up buying 200 shares of this position, and then you'll actually see that I've done something really, really interesting. I've actually sold 2 different covered calls. Now, there's a really big difference here, and we need to talk about it. Okay, so the first covered call that I sold is very short-term in nature. It's expiring in just 5 days, okay? So this option right here is a weekly option. I ended up selling a 39.5 covered call. So as you can see, my average price is $39.42. I ended up selling an at-the-money covered call for $39.50. Now, why did I do this? Why did I not give myself more room for upside? And the reason is because Kraft Heinz is not really moving that much, okay? There's a difference between NEO stock, which has more volatility, and then Kraft Heinz, which is a very stable stock. Warren Buffett owns it. So this company is not moving a lot. And for that reason, I want to do closer to the money covered calls. And in fact, if I look at this, the delta, it has changed slightly because I've had this position open after I opened up in Discord a couple days ago. But this position right here has a very high delta, 0.37. And in fact, it was a lot higher before Kraft Heinz started falling down, because it has gone down by about 2% in the past few days. But I decided to sell an at-the-money covered call because I wanted to collect the most amount of premium. So the premium is the highest the closer to the money you go. So as you can imagine, if I were to pick an option that's very far away, it's not going to have much premium. But I don't mind going very close for Kraft Heinz because I don't expect it to have that much movement. So I can basically bank on 2 things. Number 1, the dividend, and then number 2, the call option premium that I'm collecting. Now, the next thing that I did, because this is low management and pretty good return, is I ended up selling a July 21st covered call. Now, this is a few months out, but what I decided to do was go out a little bit higher to $40 per share. This is still not that much higher. It will give me about 1 or 2% upside in capital appreciation from the stock itself. But what I'm really banking on is, again, the dividend, and I collected $1.10 in premium. Now, $1.10 in premium is actually a lot, because this is $110 in premium that I've collected on just a $3,900 position. So this is about a 3% return, plus I'm collecting dividends, plus this is very low volatility. So this is a fantastic retirement strategy. If you have a little bit more money, you can absolutely do safe companies where you sell covered calls. Now, it doesn't matter if you have a small account either, because with a small account, this still makes sense, because I'm all about consistency, growing your portfolio slow and steady, getting rich slowly. I'm not a fan of doing anything risky or buying strategies, because those strategies are not consistent. They end up losing money, you end up being stressed, and that is not the point of how you want to grow your wealth using options. My psychology is I'm always after safe, passive income, And the covered call strategy is one of my favorite strategies because it's safe, it's passive, it's consistent. And I can also do the double dividend strategy, which is basically picking low volatility companies and then using covered calls to generate income on them. Now, I do want to talk about different scenarios and give you some tips, because if you can watch out for the factors that are affecting the stock, then you can actually avoid a lot of losses. So for example, let me go to something like Oatly. Okay, we can use a number of different examples, but when a stock has really strong momentum and it's going to the downside, what you actually may want to do is you may not want to hold your covered call until expiration. Typically, I do hold my covered call until expiration because I get the biggest raw return, okay? So I typically open a position and I don't even touch it. I just let it expire. And you can actually see that I'm doing the covered call strategy on Oatly. It's going very well. In fact, I'm up $1,000 on a very small position. But I will tell you, when a stock is going in the opposite direction of where you want it to go, and it just continues to go down and it hits a certain threshold. So for me, that could be 5% or 10%. It just really depends on the technical analysis. So let's just take a look at NIO again, for example. It has a really strong support at 825. But for example, let's say that this goes down a lot and it breaks support and it ends up falling. To be honest, I don't even know where it would fall because it's already such a value stock. But let's just say that it goes down to $7. Well, in that scenario, what you're going to want to do is actually roll your strike lower. I won't actually hold the position until expiration in that scenario. So as you can see now, I have a lot of different option positions in my portfolio. I have American Airlines, which I'm doing a covered call. This has been my bread and butter for a very long time. Basically every single 1 to 2 weeks in my Discord, I'm opening up a position on American Airlines. I'm selling covered calls and I'm usually collecting about 1 or 2% in premium. So I have that on American Airlines. I have Kraft Heinz. I'm just trying to look for an example where my covered call has made a lot of money and I may want to roll it down lower because the stock most likely fell a lot. So I'm trying to find that example. If we find a example, I'm going to open that up. So let's take a look at maybe Alibaba. So let's actually finish the positions that I have. So I have Alibaba 88 call. Other covered calls that I have currently in my portfolio looks like Oatly. I also have SPY. So SPY could be a really good example for us. Yeah, let's go into SPY. SPY is a perfect example because I have a lot of money in SPY. Specifically, if we take a look at my position, I have about 85% of my portfolio in SPY at the moment. This is basically the rock and the stability in my portfolio, kind of like the anchor, because I look at SPY for diversification. I have a lot of money at this point, right? $2 million. So I don't want to invest my entire $2 million in a single stock. So what I do is I make my life a lot simpler by investing in the S&P 500. And I also have single stocks as well, but S&P 500 is really my anchor and it provides me income because I am doing the covered call strategy, hence the title of this video, on SPY as well. So as you can see, a big position on SPY, 84.5%. 3,000 shares. I have $1.2 million. And what I want to point out is that the current stock price is $412. And the position that I have right now is the $419 covered call. Now, if you'll notice that if SPY goes down, my covered call is benefiting. So if I expand this covered call right now, I want to show you something really interesting about managing and also rolling and adjusting a position to make more money with it using the covered call strategy. So the 419 covered call is what I have right now, and you'll notice that I'm up $3,420. Now, this is interesting because SPY is falling down, and obviously my covered call position is benefiting. It's creating income. It's decaying, which is fantastic because when you're an option seller, you want the stock to basically stand still, potentially fall down a bit if you're doing the covered call strategy, but ideally it stands about still. So that's exactly what SPY is doing, and that's exactly why I've been making so much money on SPY. It's very stable. As you can see, I just did this last week and I made about $630. And then again, I'm up about $3,420, which is, a pretty good stable return. If I'm able to do this on a weekly basis, then I'm making about $12,000 a month just on SPY. And that's a very safe, passive, consistent income for me. So I want to show you how to roll this though, because check it out. I've already made about 13%. Now this is not as high of a percentage as I want to see to roll this position, but for example purposes, I've already made $3,420. So if I want to make more money, and I don't think that SPY is going to go up a lot, I think it's going to continue to be stable, what I will actually do is I will roll down. Now I've shown you guys before, and I've shown my Discord how to roll up, which is protecting your gains. Okay, this is actually making more money, which is slightly different. So what I will do here is I have SPY 419 covered call. I'm going to go to roll this position, okay? And because SPY is pretty stable and it's falling down a little bit, what I'm going to do is I'm going to roll down. So right now I have the June 16 expiration. So let's just say I still want to use June 16. You don't always have to roll out, although you could. So I can use June 16, or I can just do June 30. Let's just use June 30 because it's a very slight change. It's only a few extra days, actually 2 weeks, about 14 days out further. But now what I will do is I will go from 419 down to, let's just say 418, okay? This is not even a big deal. This is a very small difference. But if I just move down by 1, yes, I'm increasing my risk very slightly, but I'm also collecting a total credit of $5,100. So rolling can make a very significant difference in your profits. And there's a lot of benefits to rolling as well, because if the stock is moving up and you can't make any more money, you can roll up and out. That's going to give you the benefit of having more capital appreciation and collecting more income. And the biggest mistake is to sometimes just hold the position and let it expire, because if it's already in the money and it continues to go up, then you are leaving money on the table. So if that happens, what you want to do next is you want to roll up. What I want to do in this scenario is I'm actually going to roll down, because the benefit of rolling down is I get an extra $5,100. Yes, I'm increasing by 14 days, but because SPY is trending a little bit lower, I can make a little bit more money. Now, this is still safe risk management because I'm only going down by about $1. And risk management is super important. So what you would not want to do is you would not want to go from 419 down to 412, which would be the current stock price. Because if SPY just goes up like 1%, you're going to miss out a lot of gains. So I would not change your strike prices too drastically. What I usually do is I adjust my strike prices very slightly to make more money, to protect my gains, or to reduce my risk. And that's really important, because reducing your risk and reducing the volatility in your portfolio not only will make you feel better, but it's also going to look a lot better in your results, because when you have less volatility and more stability, then you just basically see a portfolio that's consistently going up. Like if I go to my year-to-date return, you will notice that it doesn't have a lot of volatility, so it's very easy for me, and it's also simple for me just to rely on this income. And just to prove that I do rely on this income, if I go into my portfolio, I just want to show you that I am consistently taking money out and withdrawing from my portfolio. So if I go to transfers right now, I'll show you that I'm consistently taking money out of my portfolio because I do use this portfolio to pay my team. My team costs me over $50,000 a month, so I am taking a lot of money out of my portfolio. And I use this for lifestyle, and I also pay my team, which helps me with my Discord. Now, what would I use covered calls on? It would be on SPY, so you need to listen to this insert of a video I made yesterday on SPY. Hey guys, what's going on? So in this video, I want to talk about covered calls and how I'm using covered calls on SPY specifically to make a lot of money. And for me, I like to keep things as simple as possible. So I want to go over my honest strategy of where I have most of my money invested. So I have currently, as you see on the screen, I have 83% invested in SPY. So now let's take that off the screen. And I just want to talk about the covered call strategy in general. So for me, covered call strategy is literally one of the best strategies, and I'm gonna blow your mind right now, okay? Get ready. Uncle Henry, it's about to blow your mind. You probably never heard of this, okay? I would say 99% of you. And if you heard of it, kudos to you. You're a fantastic little trader, or you're just really educated here. But the truth of the matter is, did you know that a covered call is exactly the same as a sell put? Yeah, I know, it's crazy, but they actually look exactly the same. So here's what a covered call looks like. And here is what a sell put looks like. So if you notice, I don't know why I put a heart, but because I love you, okay? I love you guys. I love you subscribers. And if you're not subscribed, you know what to do. Hit that subscribe button, hit the like button, because it also really, really helps me out and makes me super happy to keep creating content. But all right, so check it out. Okay, so covered call, okay? Sell put. These two things actually have the same risk profile. So they actually look identical, okay? A covered call, the only benefit versus a sell put is a covered call actually collects dividends because you own 100 shares of stock and you're selling a covered call on it, where a sell put, right? It's just, you don't have anything. You don't have anything in your portfolio at the moment. It's basically just an obligation of potentially having to buy a stock at the strike price that you sell a put option on. So now going back into my screen, you'll see that I am basically doing covered calls on SPY. Like right now, if I scroll down, you see the 441 right here? Okay, so let me explain to you what I'm doing, okay? And essentially, this is actually in the money, so what I'm going to teach you in this video is gonna be super interesting because, well, I'm not only gonna talk about my covered call strategy, but I'm also going to discuss how I roll higher. And rolling is a super important topic. It's a fairly advanced topic, but if you know how to roll, you are really going to be rolling in that dough. Am I right? Dough. All right, so, besides the humor, okay, it is really funny and it's really nice when you make consistent income. And that's all I'm about, right? I'm all about the consistency. I can't stand the people that are just going out there like a casino. They're like, I'm gonna buy some call options. I can't stand that, okay? My strategy is super boring. Like, look, SPY 441 call option. and I'm basically selling a call option on my shares. I do have 3,000 shares, so it is a whole lot of money. So if you have a small portfolio, please don't get discouraged. I literally started with $2,000, and yeah, it took me a long time. And yes, I added some money to my portfolio, and yes, I also had a really good return, and I took a lot of risk, and I went on a long journey. But hey, all of our journeys are individual, and I truly believe that anyone can make this work. Like, not in a day, not in a week, not in maybe even a year, but over a significant time period. Option trading is literally the best investment. It's better than real estate because I can't stand real estate. I do not want to own any properties. No, thank you. I don't want any tenants calling me. I love people. I'm kind of extroverted, but over the years, I'm basically becoming more introverted because, well, it kind of gets difficult working with certain types of people. But for the most part, I love being a coach, so I don't have that problem. But essentially, I don't want to be a landlord because whenever people call you, they just have like an issue, right? They're like, oh, my sink is leaking and my there's a problem, or the sink is clogged, or I don't know, right? I have never been a landlord, and I never want to be, because with trading options, it's actually very similar to the market, right? So basically the market returns 10 to 12%, and so does real estate. Now, I know some of you real estate professionals are telling me that there's tax benefits, right? You can basically over 27 and a half years depreciate your rental real estate and pay less taxes. I get that. But also with option trading, you can make a 36% return per year, which with real estate, well, you can, but you're going to have to buy not in an A+ neighborhood. You're going to have to buy in like a C neighborhood, and you're not going to have the best tenants. Of course, you can fix and flip. But anyways, I'm kind of off topic. What I want to basically discuss is covered calls are literally it. I mean, you can literally retire just doing covered calls. I have a student named Denny. He might be watching this. But when I was working with him, he was just basically like, I'm going to sell puts, and that's all I'm going to do. I'm a one-trick pony. And he was making $6,500 a month. And he did it literally super consistently. And I'm very happy. And I'm very happy that someone can just focus on their family and do other stuff and not get sucked into, oh, how do I do a butterfly trade? And how do I do a broken wing iron butterfly? It's like, well, there's a lot of strategies, right? But if you just keep it simple, like covered calls, you can literally get the job done. You don't have to get it complicated. And honestly, the craziest thing ever is you can just trade covered calls on one ETF, which is SPY. Well, SPY and QQQ. I like both, okay? But my SPY strategy is super simple. I have 3,000 shares. Again, we'll put up on the screen. I have 3,000 shares. As you can see, my portfolio diversity is 82.97% in SPY. So it's quite a bit. And with the rest of the 17%, I'm basically trading spreads, and I'm doing some other stuff basically for my Discord community because I don't want to invest everything in covered calls. That would be a boring life. And I do want to teach people how to be more active traders. I don't think we should be the most active in the world. I don't day trade, I don't swing trade, but I get it. It is fun to make weekly income. It's also fun to make monthly income. And if I just did a yearly covered call and I didn't do anything else, like you see this covered call is out until September 15, which is about 2.5 months out, which would be 10 weeks out. I mean, if I didn't do anything for 10 weeks, life would be a little bit boring, but I'll be honest with you, a majority of my portfolio is just invested in something super boring because I believe the boring stuff is what works. And I've literally seen the richest people ever, like millionaires, 100 millionaires, billionaires, they have the most boring businesses that they just do for like 30 or 40 years, and that's how they become rich. So the same thing kind of applies in option trading. There's a lot of cool stuff that you can do, but the cool stuff, I don't honestly necessarily, how do I put it? I've never seen anyone doing the cool stuff where they actually make good money. It's kind of like that broke guy that has a really nice car and he just like flexes and shows off, but everyone knows that if you look at his bank account has like $5,000 or like 10 grand, which is like nothing. Right? But he's flexing a BMW or a nice car. And that's kind of how I felt growing up in Philadelphia. All these, I'm not an immigrant. My mom came pregnant actually I'm from Eastern Europe. So my parents came from like Moldova, Ukraine area. And all the Ukrainian, the Russian, the Eastern European people, like they flex everything they got. They got 10,000, they're putting 10,000 on a vehicle. I don't know. Not that smart in my opinion, but I also get it because you only live once and flexing can be fun. It's not my personality type. I've never been really into that. But anyways, the point is that if you stick to SPY, which is basically my strategy, I think that you can do really well. So for example, what I'm doing, and yes, I promised about rolling. So let's get into rolling. I know I'm being very verbose in this video, but just want to tell you guys how I feel about this one strategy because it's so simple. Like I'm just trying to give you painting you the story, okay? So SPY 441 covered call option, okay? So I have 3,000 shares here, $1.3 million, which is quite a lot of money, okay? I get it. 441 covered call. If I take a look, I'm getting a dividend, which is pretty nice. Let me go into my history though, because I want to show you. Well, actually, I kind of forget myself. How much did I collect? So I want to go into my history. And again, I'm super transparent. Like I have nothing to hide. I have wins, I have losses. I'm a normal human being. Honestly, it was crazy in my boot camp, which is not currently open. But I had a student that made, I think it was like 38% return in 1 week. And I was like, bruh, that's a lot of money. He did take excessive risk. He did put credit spreads on Tesla. But hey, look, I'm the coach and I'm not going to get jealous if someone outperforms me. Quite frankly, I hope people outperform me because that's more stories. And I'm the type of guy, basically, a lot of people get super jealous. Those are super weak-minded people, okay? Super weak-minded people get very jealous. All right, I'm trying to get to the point here. All right, so let's go to the covered call. As you can see, I did have a covered call roll right here, which is 2250. So as you can see, I limit bought 1266 and then I sold. So this is actually a debit. So I actually had to pay here. It looks like I sold for $11.91. So this is exactly actually what I want to teach you in this video. So I am rolling for debits, and although I did say in a not so long ago video that I only like to roll for credits, which is basically true almost all the time, I think it's also okay to roll for a debit because just rolling in general is fantastic, whether you're rolling for a credit, which is most of the time, or rolling for a debit. I'm going to show you what rolling for a debit looks like. It's actually like right here. So I went from 435 to 441. And I had to pay $22.50, but I rolled up a lot of money. Like seriously, like it was like $6, and that's 30 contracts. So that's like $18,000. So I paid basically $2,000 to make $18,000, which is insanely high. Again, just being super transparent, I wanted to look at my history. So if I go back to my SPY position, okay, again, getting that dividend, so that's cool. So what I'm doing right now, let me just show you an example. So I'm actually in the money, which is not ideal. And I'm down quite a bit, but I'm not actually like down. I just have a covered call that's in the money. So I am just theoretically kind of down in terms of opportunity costs. And a lot of people get super upset when their covered call is in the money. But to be honest, if you prepare emotionally for, say you buy a stock, right, and it's $100, okay? And then you end up selling a covered call, which is $110. Say that the stock goes up to infinite amounts of money, to tens of thousands of dollars. Well, sure, you could have been as rich as Elon Musk, but if you think about it, in 30 days, if you bought a stock for $100 and it went to $110, you collected $5 in premium, you turned $100 into $115, which is a 15% return in 1 month, which at this very moment, ask yourself, are you happy with 15% per month? The answer should be yes. The answer should definitely be yes. 15% a month is more than the average stock market return per year. So are you happy with 15%? Yes. Now the stock goes to infinity and all of a sudden you're kicking yourself in the you know where, right? You're kicking yourself there, right? You're like, oh, I'm such an idiot. Why did I do this? Oh, I'm a moron and I made a mistake. Well, the truth of the matter is you didn't make a mistake. The only thing is you're emotionally upset because you could have made more money. But that's just a psychological bias. That doesn't actually mean anything because you made 15%, you should be happy, okay? And by the way, I actually have a story about, actually when I worked at Goldman Sachs, it was really cool story, but my very first day, basically at Goldman Sachs, a lot of what I did, I worked in private wealth management in Los Angeles, and there's lots of movie stars and Hollywood actors and CEOs and tech giants and everything in between, but mostly actors, right? Because it's Los Angeles. And it was mostly like Hollywood. This was back in 2016. Okay, so in 2016, basically I was sitting there next to the financial advisor who was managing about $3 billion. The guy doesn't do anything. He just puts his feet up on the desk and just BS's with clients that give him calls, right? And I actually found this really interesting because, I was studying like psychology and game theory and economics and like other stuff in college. And the interesting part was that he got a call, right, from a client who had ended up, I think he bought call options. I don't remember the exact situation of how he made the money, but he made $600,000. And for the client, that wasn't that much because I think he had $10 million. So $600,000 is still not a chunk change. Like you can buy 2 Lamborghinis, or maybe you can like travel Europe like I am, but it doesn't cost $600,000 to travel to Europe. You can do it on a lot less. But anyway, so he made $600,000, and he was like, "Oh man, I made all this money. I should do something risky with it because now I made." He was a new client. So now I made $600,000. I should use this money in a risky way because now I'm playing with the house money. Well, sort of. Like you are playing with the house money, but the guy thinks he's playing with house money. But me and you know right now, at this moment, we know if you have 10 million and you made 600,000, now you have 10,600,000, and you just close out that position and run, you have 600,000. But the guy doesn't see it that way. He sees it as, oh, I made $600,000, so in a short amount of period of time, I got to use the 600K to gamble with it. So anyways, the mentality was, psychological bias. And that's what I mean about covered calls. Like a lot of people, they lose out on the upside and they're like, oh, I'm in trouble. Why did I do that? I'm such a moron. It's like, no, you're fine. You came into that position expecting to make X amount of percent, say 15, and now it made you 15, but it could have made you 50, and you're upset. It's like, well, don't change your mind, okay? If you were happy with 15, be happy with 15. Stop being greedy. And look, I'm greedy myself. I love money. I love it. But, I also understand psychological biases. So in terms of the covered call strategy, I guess this is like mindset around covered call strategy. What you want to do is you want to pick a strike price that you're happy selling off the stock and then set it and forget it. Now, on the other hand, you can also roll, okay? So this is the part we're going to talk about rolling. I know this is a long video, but doing a different style. If you like this style of me talking and kind of being a little different on camera, obviously I don't have a script, and most YouTubers are always staring at the camera like this and reading off the screen, and I'm not doing that because I'm just talking normally, naturally, without any script or any preparation. I just want to be as authentic as possible so I can be the #1 option YouTuber in the world. That's my goal, okay? I do this for fun and passion, so obviously it's like something I love to do. So anyways, I want to show you what rolling up the 440. Leave a like button. It freaking helps, okay? I know I said that, but if we can make the likes really high in this video, I don't know what I'm gonna do. You tell me what you want me to do, I'm gonna do it, okay? I like them likes. Okay, so 441. Look, it's as simple as this. Like, I'm gonna go to roll this position from 441, and I'm gonna roll it from 9:15 to get my serious face on. I like traditional Friday expirations, so the third Friday of every month. As you can see, it's November 17, December 15. That's not a traditional expiration. December 29th is not. So we'll go to January 19, okay? I don't even have to go that far. I can go from September to November, right? That's an extra like 60 days or something, right? So what I can do is I can move from 441 to say 440, just to keep the math number, the number is easy. 441, oh, I can't because they don't have 446, but let's do 445. So as you can see here, I'm collecting a huge credit, $11,000. But then also what's happening is I'm moving up by $4. So not only am I collecting a credit, but SPY is currently in the money at about $443.98. So now I'm moving from 441 to 445. So I'm moving up by $4. There's 30 contracts. That is $12,000. So I'm making $12,000 in potential upside. It's in the money by about $8,000. So I'd be making $8,000 like that, but then 4,000 would be potentially earned. You know what I mean? If it went to 445, right? So basically I'm giving myself the potential to make $12,000 more, and then the total credit is $11,000. So that's like 12 plus 11, it's $23,000, which is quite nice, right? So $23,000 is my potential. And then as you can see here, my time change is 2 months. So in literally an extra 2 months, I'm making an extra $23,000. So, I mean, granted, it's not a whole lot of money in comparison to my portfolio, but it's super steady, it's super safe, and it's SPY. There's not a whole lot of volatility. This is a super simple strategy where I'm just rolling higher. And if I can keep doing this, then I can continue making the easiest easiest $11,000. Like it's pretty simple. Now, obviously, this isn't going to get you to the big money, but this is going to get you to the most stable real estate, passive income results. And to be honest, I'm just going to break one more secret, okay? Investing is awesome. You have to do it. It's a no-brainer, right? And I'm the biggest proponent of investing. But to be honest, you're not going to take 5K to 5 million just investing. Like, you just can't, because it's more of a passive income source. It's not an active thing. A lot of people want to trade actively. You know, like in my Discord community, I'm really blessed because the only people that book a call or click the first link are people that kind of understand my mentality, because I don't promise get rich quick. I don't promise short-term stuff. So luckily I have the most awesome people booking calls, and then they actually get results because I go after the type of person that's like, I want to make money for sure and I want to get rich slowly, not the I want to get rich fast type of person. I don't like that type of person for many reasons, right? A, I don't believe in that at all. Like, nothing's fast in life. And then B, I don't want to work with that type of person because, for example, like when people end up joining and we figure out a goal, like a lot of people's goals is, well, a lot of people want $10,000 a month, but like we have to be realistic and say, hey, we're going to make $3,000 a month. And you know, when they make 3,500, they're bragging. They're like, I made 3,500. They're bragging. That's fantastic. But if I'm like, hey, we're going to make 20K, and the guy makes 3K, he's upset at me. Even though he made 3K more, he made $3,000 more in this 30-day period than he would have. But he's upset. Why? Because the expectations are wrong. His expectations are wrong, and I'm doing a disservice by lying to him and telling him he can make 20,000, which he can't, right? So just honesty there. But essentially, this is a boring strategy that works, okay? SPY, covered call, boring strategy. You know, leave me a comment if you want another video on the boring stuff that I'm doing on my portfolio, but a lot of my portfolio is in SPY covered calls.